Today's top business news now. Brian is joining us. He's starting with that two-day state visit to China by Vladimir Putin, the Russian president, seeking to shore up the two countries' no-limits friendship, Brian.
So, Stuart, China has been coming under increasing pressure from the West to put some limits on that relationship when it comes to trade, particularly the so-called dual-use items China exports to Russia that, while not directly military in nature, can be put to use in the Kremlin's war effort against Ukraine. Russia's economy has largely been cut off from the West. That isolation, though, has not resulted in the kind of economic damage Ukraine's allies had been seeking. Meeting with Xi in Beijing Thursday, Vladimir Putin lauded increasing trade between the two countries and what he called a portfolio of 80 large joint investment projects, as well as the decision to transition payments between the two countries from dollars into rubles and yuan. Vedika Bahel takes a look at how Russia-China trade ties have evolved in this report.
It's the Russian president's second visit to China in 7 months. And according to Beijing, the relationship is as strong as ever.
China and Russia regard each other as comprehensive strategic cooperation partners in the new era, and our relations have continued to develop, with the leaders of the two countries maintaining close contacts.
In February 2022, the pair declared their alliance as a no-limits partnership. Right before Russia's invasion of Ukraine the same month, it triggered slews of Western sanctions on Moscow. But despite the penalties, the Russian economy was not brought to its knees, instead experiencing 3.6% growth last year, helped by closer trade ties with its neighbour. According to Chinese data, bilateral trade hit a record $240 billion last year, up 64% since 2021, with Beijing becoming Moscow's key supplier of clothing, cars, raw materials, amongst other things. China, for its part, imported 107 million tons of Russian crude oil last year, 24% more than it did the year prior. Whilst Beijing defends trade with its neighbour by saying it doesn't supply arms for Moscow's war effort, it does export over $300 million worth of dual-use items, components that could be used to create weapons, every month. As of 2023, China has become Russia's #1 trade partner, whilst Russia is China's 6th largest.
Now, next one, Brian, new data out of the US showing inflation there finally started to cool down once again, Brian.
So the latest numbers, Stuart, breaking a 3-month streak of rising inflation. The U.S. Consumer Price Index up 3.4% in April versus 1 year ago. March's reading had come in at 3.5%. Core inflation, which strips out the more volatile food and fuel prices, up 3.6% last month, down from 3.8% in March. Price rises have calmed significantly since peaking at 9.1% in June of 2022, that raising hopes that the Federal Reserve could begin cutting interest rates as early as June. The Fed's benchmark rate is currently at a 3-decade high of around 5.3%. Recent hotter-than-expected CPI reports, though, have killed those expectations. Energy and housing costs remaining particularly high, especially rent. And while many investors are now hoping for a September rate cut, some analysts think they'll be waiting even longer.
Yeah, if I look at the data that we see, whether it's, from metals to agriculture, things have been going up. We see services going higher, shelter prices going higher. And so I think that's where we want to look at, is that's going to continue, I think, through the rest of the year. And you want to have some investments that are looking at higher inflation. And I think rates are going to stay there because of that.
So what effect then, Brian, is that inflation data having on the markets this morning, if any?
Wall Street went on a real tear Wednesday, the S&P 500 notching a new record. European indexes, though, taking a more cautious line as London, Paris, and Frankfurt all open fairly flat. EasyJet posting a larger than expected quarterly loss. The FTSE slightly in the red at the open in London. Over on Asian indexes, the Nikkei in Tokyo up nearly 1.4%, despite new data showing Japan's economy shrank by 2% in the first quarter on an annual basis. Chinese indexes gaining too as real estate shares jumped Thursday amid reports that the Chinese government may begin buying millions of unsold homes from struggling property developers, and that property crisis in China, a big factor in China's overall economic slump. So if the government does start stepping in with home purchases, that could have a big effect, not just in China, but across the global economy, in fact, Stuart.
Brian, thanks very much. Brian Quinn following all the latest business news for us on France 24.